Hi friends, Dr. Joe here. I hope you all are doing great and welcome to this video. Like you saw on the thumbnail, we are going to discuss one strategy that can work in any financial instrument, especially where the display can be seen in a candlestick chart pattern. What is the most important thing about any financial instrument is the price always moves up, down, up, down. The only difference is when the price is in an upward trend, the upward waves are longer compared to the downward waves. Same is the case in a downtrend. When the price is in a downtrend, the downward waves are longer than the upward waves. That is the reason when the price goes up, the price first creates a resistance, then comes to the support. Then it creates a new resistance and makes the previous resistance as support. Then it creates a new resistance and creates the previous resistance into a support. The prices will always move in this direction. If the prices is not giving you these indications like previous resistance, new support, or previous support, new resistance, avoid trading in that markets. Simple. There are thousands of financial instruments that you can use to trade. So you don't have to worry about financial instruments. Anywhere you do not see this pattern, just stay away. And when you see this pattern, grab and take this opportunity. You can see that the price has reached one resistance, then came back down. Then the price continued in the same direction, broke the resistance, created a new resistance, and then came back down. It tested the previous resistance and made a new support. But what is the beauty is when it created a new support, it also created a very, very interesting candlestick pattern, which is called as a doji dragonfly candlestick pattern, which has a long tail towards the downside and has a very small body. This clearly shows that in this particular day, the bears tried to push the market down, but they were unable, and the bulls then pushed the market up. So this is a clear indication that from here on, the price is going to go in an upward direction. And as you can see, I have marked here with a small light purple square. You will be able to see the same square in a smaller time frame. At the same time, you can see the horizontal line and the vertical line. Now, like you can see on this lower time frame, you can see the horizontal line, you can see the vertical line, and you can also see the small purple square which I had drawn on the 1 day chart. Now, this is a 1 hour chart, and I've used two indicators. One is showing me the trend. I have used the dynamic support and resistance. And the second one I have used is support and resistance indicator. Okay, so as the price keeps going up, you will see more of green lines. And when the price start coming down, you will start seeing a lot of red lines. So since it's all green lines, it's a clear indication that the price is in the upward direction. So now you can see over here in the first case, the price has created a high, then came back down, then broke that resistance, created a new resistance. It came back down and created a support. Now you could have taken a call over there also, but you waited. You waited for the price to break the second resistance and then come back and test that second resistance as a support. So in a daily chart, in that place, you have already seen one doji candlestick pattern. And over here, you can see it is in a confluence area of the support and resistance, that is the structure support and resistance, and a dynamic support and resistance, which is the moving average support and resistance. So this is a perfect point to enter a trade. Now, as I always say, risk management is very, very important. So do not infuse more than 1% in one particular trade because there are hundreds and thousands of financial instruments you can trade in. So don't risk too much in one trade. 1%, maybe 2% maximum. So this is how you can trade in a very, very simple way. You wait for the trend, you wait for at least one or two good support areas, which is at a previous resistance area, and then you can enter the third support area. This way you are sure that you are entering in a trend. So friends, I hope that this video has made it very, very clear that how you can use the trend to enter a trade. As I said, this can be used in any financial instrument. It can be stocks, it can be commodities, it can be forex, it can be crypto. Wherever you want, you can use this strategy because this is the psychology of the markets. So try this, use this. I assure you, you will get good success. Higher the time frame, you will get better results. Lower the time frame, the results will not be that good. In higher time frames, you will get 70% win ratios. In lower time frames, you might get 30 to 40% win ratios. So it's better to trade on higher time frames. So that's all in this video, friends. If you love the way I'm creating these videos, please like and share these videos. So like you, there might be many others who want to learn these simple trading and investing techniques. If you share, they will also learn from it. And if you're still not subscribed to my channel, kindly subscribe to my channel by clicking on the subscribe button and clicking on the bell icon. Friends, all I can say is keep learning, keep growing, keep getting better every single day. And if you really want to make it big in the stock markets, you need to practice and you need to have a lot of patience and persistence in the markets. That's all in this video. Thank you. Namaskar.